This is the May 10 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Joe Janzen from University of Illinois. He's an agricultural economist. Naomi Blohm with Total Farm Marketing. She's at West Bend, Wisconsin. And Ellen Dearden of AgReview out of Morton, Illinois. Commodity Week is a production of Illinois Public Media. It's public radio for the farming world. Find us online at WILLAG.org. Let's begin with Joe Janzen from the University of Illinois, agricultural economist. I asked him not long after the Friday USDA reports were released, updating the world agricultural supply and demand estimates, and that included for the first time this year the new crop supply and demand tables.
Yeah, USDA released its first projections for the new crop 2024-25 balance sheet for both the U.S. and world supply and demand. U.S. numbers came in roughly in line with expectations on the production side. A corn crop of about 14.8 billion bushels, soybean crop right around 4.5 billion bushels. That was basically in line with the numbers that had been put out prior to the report. Its long-run projections released back in February, and the acreage estimates that it released in March. So not much of a surprise there. USDA also released old crop numbers for the 23-24 crop. Again, nothing big changing there. Corn ending stocks reduced a little bit, down from 2.1 billion bushels in April to about 2.02 billion bushels this month. That was maybe a little bit of a support to the market. And then USDA also touching on the world supply and demand situation. Again, not much change in its estimates of Argentina and Brazil corn and soybean production, which are the big numbers there, bringing both the Argentine corn and the Brazil soybean production numbers down, corn and soybean production numbers down a little bit, but not massive drops, and nothing that would sort of, bring a bit more consensus given the sort of much lower corn and soybean supply and demand estimates out of Brazil that we've seen in the last few months.
Were you surprised? You've done some work on that side of the issue, the Brazil side, that is, you and the farmdoc team. Were you surprised USDA hasn't come down, or is it still, in your opinion, that CONAB is just too low in their total production?
I think there are just some fundamental disagreements really about the size of crop use in Brazil, and that's really what's driving this. And I mean, nothing changed in the last month that would kind of resolve that disagreement, if you will. So, I mean, USDA is clearly watching what's happening in Brazil. I mean, there has been some news about flooding in the south that has inhibited the last sort of bit of soybean harvest that's going on there. Major flooding in Rio Grande do Sul that does have, a bit of a production impact. And we saw that, USDA is reducing its soybean production number, but it's not it's not looking at CONAB and saying, well, we have to get to that number eventually. And I think ultimately there's going to need to be a reckoning about what the usage of that crop is and how it's going to get squared up with these widely diverging estimates of production.
Have you thought about what kind of losses there might be out of Rio Grande do Sul in terms of million bushels or metric tons? Do we have an idea?
I think we know that there's about roughly an estimate of about 7 or 8 million metric tons that are left out to be harvested. How much of that actually comes in, I mean, it's not something I have any sort of inside information on. But it's a relatively small share of a Brazilian soybean crop that's, in the range of 150 million metric tons.
I will check in with Joanna Colucci as well. She should have some good contacts in that area to see what they think. Part of the FarmDoc team. When you take a broader look in context at the numbers USDA released today, what does it tell you about marketing farmers should be still doing for old crop and new crop?
Yeah, we've seen a little bit of a bounce in the market, particularly corn with that lower ending stocks estimate. Both old crop and new crop ending stocks estimates came in a little bit lower than projected. We've seen a bit of a rally in the markets in the last in the last few weeks, those are opportunities to kind of clean up that old crop. I think we want to be very careful going into this summer season of weather-driven volatility with a large share of that 2023 crop still to be marketed. The upside you have covered with that 2024 crop. I think there are some sort of warning signs in USDA's current estimates. The one thing I think that has surprised the market a little bit today is just the strength of U.S. corn and soybean usage from USDA. USDA is projecting, a relatively rosy picture for the use of U.S. corn and soybeans, particularly looking at both biofuels use and export demand being relatively strong for corn. That domestic crush piece being pretty strong for soybeans, and maybe a little bit more optimistic than I think the trade was. And I think that poses a risk if we don't see that strength in biofuels demand in the next year. I know my colleague on the FarmDoc team, Scott Irwin, is while his long run projection for biofuels might be relatively strong, in the short run, I think there has to be some reckoning between all of the rosy projections for crush demand and for ethanol demand in the U.S. and just where the industry's at with the competition among feedstocks. If that usage projection doesn't come in where USDA is thinking, there is downside risk here that both on the old crop and new crop pricing picture.
Joe Janzen is an agricultural economist here on the Urbana-Champaign campus at the University of Illinois. Now let's turn our attention to Ellen Dearden. She's at AgReview in Morton, Illinois. What was your reaction to this morning's USDA reports?
Well, my reaction was that the trade had a pretty good estimate on the 24-25 crop production in the U.S. side. Pretty much the guesses were in line with trade thoughts in every corn, beans, and wheat. Maybe a little bit on the light side on winter wheat. But I looked at that and I thought, well, okay, there's production, but what about demand? And, that always gets you a little bit nervous because starting out on demand, you're just pulling these numbers out of a hat kind of along that line. But USDA increased crush on soybeans. That kind of surprised me a little bit. They also increased bean exports. Again, a little bit of a surprise, and they decreased imports. So that left stocks to use at 10.2%. That looked a little bit better than what I think I was anticipating at that stage of the game, and the initial market reaction was about a dime upside move. That stocks to use ratio, I think, it probably will grow during the year. On the corn side of things, pretty much processing was left unchanged, ethanol unchanged at 5.45 billion bushel. But again, exports were bumped up a little bit, so perhaps USDA thinks that South America won't be able to provide corn and beans to the world market. Well, I'm not sure. Stocks to use on the corn pretty high at 14.2 billion bushel. So in the domestic side of things, I didn't think we were issued anything that was very negative, and that's always a surprise when we have these USDA reports. I want to remind your listeners that the production side of things does not come from NASS. That those numbers won't start until late in the summer. These are strictly stuff coming out of WASDE.
From the World Agricultural Outlook Board.
Yeah, they are. On the world side of things, the ending stocks on 23 crop on corn were a little lower, and beans a little lower, wheat a little lower. So we're obviously using up more of that 23 crop on the 24 crop size. USDA is projecting a lower than what the trade thought on the corn stocks, in particular, higher on the beans, but lower on the corn. And when you go and shuffle through the numbers, you wonder, where's that corn going to be used up? But it appears to me that we've got less corn available coming out of Europe. We've got less wheat in France. We've got less wheat out of the Black Sea region. So perhaps we're going to use more corn for feed uses, even if China is not the one using them. USDA has China pretty high, I think, on the corn imports at 23 million metric tons. China's been saying that it wants to shave those, so they say their corn needs this year for import are only 13 million metric tons. I guess we'll have to go and see. It will be interesting as China has approved more and more genetically modified corn, how that plays out on their production. Will their corn production jump a bunch? I mean, I think that's what happened in the U.S. So that may be USDA's number at 23 million metric ton imports of corn, maybe a little bit on the rich side of things. Anyway, I looked at those numbers and I think, here you go. There are a lot of old crop corn sitting in people's bins. What are you going to do about it? And I think I'm of the ilk that you really reward the market here in this July futures in the 465, 475 region. I think that's probably most guys have too much old crop corn sitting around, and those bills for storage are growing, and the bills for no use of your money. I did talk to somebody this morning who said that I paid my storage bill on beans. It cost me 52 cents from harvest till now. And so they could get somewhere, the posted price was somewhere a little bit on the north side of $12, and yet they were complaining about 52 cent storage bill. So obviously they've got better cash flow than I do, because that just doesn't seem like a logical thing. New crop sales, yeah, I think so. We're up close to this 490 range. We got to 491 and a fraction this week. I'm of the bent that you ought to be doing some selling. If you haven't sold anything, sell 5% on the new crop corn and 5%, maybe 10% on new crop beans. Not going to be $12 cash, and it's not going to be $4.85 cash at locations for fall, but I think you got to get going. Historically speaking, Todd, somewhere between May 10th, which is now, and June 10th on the beans, and also on December corn, we see a rally seasonally. It's not always a very big rally, but I would sure tap into that this 4-week time frame to get more new crops sold.
Beyond what you've already suggested?
Absolutely.
And how far along? I mean, at this point, if fundamentals don't change and we get the crop planted, how far along would you want to be?
I think in that time frame, you've got to look to be half sold, particularly if you're unable to store crop on your farm. So if you're storing stuff in town, I'm making heavy hedge to arrive sales for fall delivery. Basis stinks, by the way, for fall. Just saying that right off the bat.
It does.
Yep.
Yes, it does. So today fundamentally didn't really, well, it looks like it should have maybe changed the picture some. It did not for you.
I would agree. So it really came in as the trade thought, but there was no overwhelming negativeness to this report. And so I think that's what the trade is going by, with a market up. Also, as Kurt Kimmel always suggests, that the oats market sometimes a tip off to what corn's going to do, and oats have had a strong week this week again.
So there may be opportunity for sales that could be related to delayed planting. It could be dry weather or something else later in the summer, I suppose. Something
like that. If we don't get corn planted, and on our particular farm, we have 0 corn in the ground. 0. If we don't get all that corn planted, that's going to probably go to beans. I mean, I don't see much other opportunity in central Illinois for cropping something else.
Well, if they can make it go to beans, I suppose, depending on whether they've,
And looking at the weather forecast going out for another 10 days, it looks pretty darn wet. We had rain here the entire day Thursday.
And how much did you get?
I don't know, a couple tenths, but still all day long, just never saw sunshine, never saw real wind, just saw rain. Couple tenths.
And so because we already know what Eric Snodgrass told us, which is that we'll see 3 or 4 days here with dry weather, but it's going to get wet again after that. Can you move in that time frame?
I'd say 3 days, no, 4 days, maybe pick and choose a field.
So that'll push that crop back probably past the 20th at that point for planting.
Yeah, the 15th anyway, yeah. Does that make people nervous? It makes farmers nervous. Does it make the trade nervous? Not yet. That's the way I would characterize it. And, the area around Peoria may be just a small area, too. Who knows?
Could be, but I feel like that's not the case.
I feel like that's not the case yet either. Getting back to the beans, if we increase bean acres, USDA's got plugged in a pretty darn high yield. We increase bean acres. That may look pretty negative on the next go round. But these are really the numbers that we have to deal with till we get past the acreage report at the end of June.
Anything else, or are we all good now?
Meal futures look like they have tired of going up. We gapped down this week in meal futures, and it looks pretty toppy.
Ellen Dearden is with AgReview. She's in Morton, Illinois. Naomi Blohm now joins us. Naomi is in West Bend, Wisconsin. She is at Total Farm Marketing, totalfarmmarketing.com. Hi, I appreciate you taking some time with me on a Friday, Naomi, to talk about this morning's USDA reports. Let's begin just with your off-the-cuff reaction to the report. What did you see when you first saw those numbers, and has that changed at all in the last hour and a half or so?
Yeah, so what I really wanted to focus on, for me personally, were the South American numbers. I wanted to see if the USDA had finally acknowledged the likelihood of lower production down there. And so we did see some news on that front. The USDA put the Brazilian soybean crop at 154 million metric tons, which was down from 155 in April. So that was, at least encouraging there. And they also lowered the Brazilian corn crop. It was now at 122, down from 124. And with the Argentina crop, they did lower the Argentina corn crop to account for the pest situation that's been happening there at 50 million metric tons now. So that's down from April. The question going forward, though, continues to be, what will CONAB say next week, the Brazilian governing body, about the crop size with the hot and dry conditions that have been in central Brazil and the flooding in southern Brazil. So that'll be a market mover for next week. So that's where my eyes went first. I did like that we had lower global carryout for wheat and corn, a little bit maybe more than what the market was expecting. So the bottom line, though, is that this report wasn't anything that was overly bearish. And the USDA did account for some more export demand for corn. And it puts us back into a weather market. So the news, again, nothing was bearish. So the market has every reason to hold on to the gains that we've had from the past week. But now going forward, all eyes are shifting back to weather for planting, weather for growing season here in the United States, and then, of course, weather globally as well. So makes me think what we'll continue to see potentially our seasonal tendency for corn and bean prices to grind higher into the end of May or early June. But I will emphasize, whatever kind of a rally we can get out of this, we need to see producers being proactive with marketing for old crop and new crop, because at the end of the day, unless there's a significant drought in the United States or something horrible that happens in the world weather-wise, we're still dealing with 2 billion bushel corn carryout and larger soybean carryout as well. So use whatever rally we can get out of this to your advantage.
Yeah, we haven't actually given that number, I don't think yet, again, in Commodity Week. 445 million bushel carryout for soybeans. I'll come back to that in a second. But if I could turn your attention back to South America, those CONAB figures are due out on the 14th next week. What are your expectations from them, and how do agencies and the trade deal with the issues in the southern part of Brazil and Rio Grande do Sul, the floodwaters, the rainfall that has come and inundated that soybean crop, other crops as well, but soybeans we're talking about today, which is in the midst of its harvest?
Well, I feel like CONAB next week is going to, for them, acknowledge the situation that's happening. And then we'll probably see them lower that production number just a little bit more. How much? I don't know. That's the big question mark. But I think that they have to say things went from being, decent weather-wise, not anything horrible, to holy cow, what just happened with all of that flooding that has happened. So we'll see what that does to, down the road as far as can that flooded crop survive? What was left and needed to get harvested? Is it going to be a total crop failure and what needed to get harvested? So that's a big question mark. We'll see how CONAB addresses it next week. But I think the bottom line is that CONAB is still going to be lower than the USDA for both corn and bean production. And we'll see how the industry responds. If the industry wants to believe CONAB numbers, or if they kind of stick with the USDA approach of a slower reduction on production for South America.
Now, come back to the United States. Let's talk about weather. In your area around West Bend, north of Milwaukee, have farmers been able to put the crop in the ground?
So it's been mixed. People have been pushing hard when they can, but the rain that we've had in Wisconsin has been pretty consistent. We get about an inch at a time, and so we had been so dry where it was welcome. It was absolutely welcome, but now it has been too wet in some places. So some farmers are half done. One gentleman I talked to was complete. He farmed about 500 acres closer to Madison. And then there are producers up in northwest Wisconsin who are just barely getting things going. So it's a mixed bag, and I feel like we'll see that reflected on Monday's crop progress report. I feel like the places that were able to go were going, but I even talked to a farmer in central Illinois yesterday who was maybe only 20% planted just because the rains just had been hitting him at just the worst times. So it's very sporadic this year, and market's going to respond to that on Monday afternoon.
Is a weather market hope, or is a weather market in the cards? I mean, I'm trying to get at how do you talk producers who haven't got a crop in the ground out of a weather market or into a weather market as it relates to their plans for selling a crop?
So in the United States, I would say now most producers and the industry and the market feels that the U.S. producer, if you give them a week of good weather, they're going to get the crop planted, especially with the technology we have and the planters that are just, multi-rows wide. So the market, I feel, will not panic if the crop is slow to get planted. But where the panic button will come in, if we're not half planted officially by corn and beans on Monday, then the market's going to respond. And I know that yield gets reduced. The further the crop gets planted towards June, there's just more of a mathematical consistency for a yield reduction. So we still have, I think, about a 2-week window where the market's aware it's not getting planted fast, but it's also where we're probably in a situation yet where the crop gets in the ground. The next question will be, the summer forecast is starting to shift to hot and dry based on what I was reading yesterday. Of course, it's summer, so it is going to be hot and dry, but how hot and dry is the question, and how timely will the rains be during pollination? So it'll be enough where producers can, get a marketing opportunity out of this. But my biggest emphasis is that you need to get your orders in place ahead of time. So I'm still looking for old crop corn. I feel like July corn futures can get up near that $5 area. And for December corn, I feel like December corn has a pretty strong ability to get up and fill that gap near the 504 area. But again, 2 billion bushel carryout. That's a hard reason to get the numbers and the markets to go above the $5 area unless there is a definite perception that our yield and our production is going to be lower, or that Brazil number or the Argentina number is going to come down significantly further than what the market's already been trading. I do keep in mind, though, that the funds are still short, probably around 200,000 contracts, so there is room for them to continue to exit, possibly go long, but Mother Nature will dictate if that needs to happen or not.
Do you have similar targets for old and new crop soybean sales?
Yeah, absolutely. So looking at July beans, I feel like the July bean contract, so right now we're trading near the 12.16 area as we're having this conversation. I think we can get back up to 12.50 where we were earlier in the week. One thing I do notice is there is this gap on the July soybean chart. The gap is filled if we can get to 13.11 3/4. So that $13 number, though, is going to be a psychological resistance point for the July contract. November beans, I like selling beans if we can get that market up near the new crop contract. There's a gap that's filled at 12.44, and then 12.50, 12.75 is the top of the downtrend line. So again, just keep stepping those sales in place because, again, I can't emphasize that enough. It'll take a dramatic drought issue to have any reason why this market needs to justify, running substantially higher. You have to keep your expectations a little bit more in check this year based on everything we know right now.
You've been listening to Commodity Week from Illinois Public Media. It's public radio for the farming world. You may find and hear the whole of the program anytime you'd like at willag.org, willag.org. Just click and play from the website or search it out in your favorite podcast application. Look for Commodity Week. Now, let's summarize the numbers as they were released from the United States Department of Agriculture on Friday morning. Looking back at old crop, USDA says corn carryout at 2.022 billion bushels for the old, the new at 2.102 billion bushels. Season's average cash price for the new crop at $4.40. That's unchanged from its expectations in February. The soybean season's average cash price at $11.20, also unchanged from February. New crop ending stocks at $445 million. The old crop at $340 million. Our thanks go to the panelists this week, including Ellen Dearden of AgReview out of Morton, Illinois, Naomi Blohm of TotalFarmMarketing.com out of West Bend, Wisconsin, and Joe Janzen from the University of Illinois. I'm Extension's Todd Gleason.